My lump, my hump, my lovely lady lumps. Yeah, what's up? Good morning. Good morning. It's a good morning. It is a good morning. This OBS was sparring with me again before I can get the stream started, but that's okay. It's a little bit faster resolution for it this morning. Hope you're doing well. So obviously we are in the Thursday trading session for indices. Our focus has been on the NASDAQ, as you can see on the right-hand side. That is a 1-minute chart reacting off of some random level for the new day opening gap. And upper left-hand corner, we have the 15-minute time frame, and then the 5-minute time frame in the lower left. So we will be watching how we open. There's going to be a rather large gap, so we'll be annotating that real quick here. So this is where we stop trading for regular trading session hours. Again, down lower right-hand corner, that's where we're toggling, and then we're going to we will use this, and then where we open up at 9:30, we will annotate that. So right now it's trading at 348. So if I grab that, highlight it, hold down Control, drag away, and put it real close to that market price that we're at right now. When I go back to electronic trading hours, it'll be there for me to drop like that. And then I'll just change that now to this. And this will be set to whatever the first opening price is at 9:30 in about 55 seconds or less. So we have a rather large premium opening. So there's a lot of movement from where we settled on the day session yesterday versus where we're opening up. It doesn't mean always there's a complete return back to that level down here, but we will look for indications that it will try to do that. And right away, my interest is I'd like to see this traded too. It need not do anything in here. We're not trying to pick the top, as I was talking about yesterday. We want to see how the opening range is the first 30 minutes from 9:30 to 10 a.m. New York local time. If your time on your TradingView platform is not set to New York, you need to set it to that. That way, everything that you're learning in this YouTube channel is germane. There we are. So the opening price is 352. So all you have to do is change it to 352. All better, baby. Right there. So now what we're doing, we're just going to watch and see, does it have a run above the high here? That's where our buy side liquidity is. And top left. Okay, so we're just going to sit and relax. I have an appointment at 10:45 that I have to make, so we'll be going to around 10:30, probably a few minutes before 10:30. So I'll sit with you through the first 30 minutes after 10. So hopefully we'll see some kind of a silver bullet I can walk you through. Excuse me. Okay, we have a small little gap that we just traded into here. We'll see if that provides a means of engaging the liquidity there. There you go. So that's one of those really easy bread and butter setups where you can see that there's a pool of liquidity. They're gonna feed. That's Bailey. Hang on one second. Let me text my wife and tell her to kennel. All right. So we had our little initial run after a big pop at 8:30, completely random. Who could expect something like that to occur? We had this volume imbalance between these two bodies here. We traded back up into that, trading there. And we have relative equal lows from here to here. Study that. So the relative equal highs here, we saw it run above that. That small little gap right there. Small little one right there. I'll highlight it for you. I'm just going to maximize this chart. We'll work with this one. Right there. Keep it neutral. I don't want to influence you with the color, but I don't need that full line. So as we traded down into this here, I took your attention there. Obviously, it was sitting like right in here, but that right there is still a point of entry because you have low, high, lower low. You're in the breaker. That could have been used as a more or less the fair value gap. Does it respond off of it? Yes. You don't need the candle to close. And then the liquidity was here. So looking at from this area here, rallying up to take that liquidity, that's your first screenshot. You want to take and annotate that, Caleb, and have how much time it took to run. Obviously, it doesn't take much. It's like 1 minute. How much heat was on that fair value gap? 0. And then there's immediate run to liquidity. So now because we've had this run here and we've had the big run up over the last few, actually like a week and a half now, it's been going higher. We had an 8:30 impulsive price run, creating the high here. We opened 9:30, ran the buy side here. What's this? What is this right here? A premium wick. We're studying the buy side in here. We want to see, does it want to come back? Because think about it, everybody that's long, they're going to trail their stop losses. Where are they going to jam them up to? Right below here. So anyone that wanted to break out and go long, they're going to do it on a breakout above here. So they're in now. They already have people on the board net long. And where are they going to put their stop loss? Right below here. All under here. And the carryover from yesterday and this morning at 8:30 when we had the run up here off of today's new day opening gap, rallied, institutional order flow entry drill, breakaway gap. This is where a bull flag does work, and then runs up. This gap right here and the liquidity, my focus is here. I'm not trying to pick the top, but what I'm looking for is I want to see, can we break below this gap that's in yellow? Okay, that's where my focus is. My eye is there because I want to see, do we get below it, come back up and treat it as an inversion fair value gap that sends us into the liquidity here and into this gap right there. So for the morning session, it's too rich, too expensive right now to want to buy it. We have a gap higher opening. We've had an initial run to buy side. I'm not chasing that. So we're back in the same criteria that we were on, was it Tuesday? So I will not buy premium like this. This is too rich, too expensive. And again, same thing. If it wants a run, it'll run without me, and I'll wait later on in the morning, 10 o'clock. I'll do something with the silver bullet there. It's always there. It's never not in the charts. Okay. So we have one more bump above the high. And let me draw out the, this is where my interest is for the morning session thus far. And I don't know why I did that. It should be this color. There you go. So what we have here is we have low, high, low, breaker. Breakers inside of the new day opening gap. That's this level here and that level here. We consolidate, we drop down. 8:30, boom, takes off. Leaves a gap here, relative equal lows here. The highs have been taken. So what we're watching is the market being made jagged on the upside after a large gap opening. Again, you can see that here. See that big gap between where we settled yesterday and where we are here. So that's why my interest is at that fair value gap and that low, because it's only been a consolidation, run to the liquidity, come back a small little retracement, and then rally once more. So we're really expensive, very, very expensive. And a lot of traders with deeper pockets are going to wait for a discount, and they're not interested in trying to buy these inflated prices. The public, the street, the street money, or quote unquote dumb money, they'll buy it every single time it does this because they're buying momentum or they're shorting weakness. So they're always perpetually chasing price. And as a professionally minded speculator and analyst, you want to be looking for cheap, discounted prices to buy, and you want to sell expensive, premium priced instruments. So it's very important to have those rules and write those things down in your journal. Nothing forces you to pay too much. Nothing should make you feel like you're going to miss out, so you're willing to pay a higher price for it. If you have that rule in your trading, it's going to prevent a lot of heartache and hardships, because chasing price is never a good thing. Very, very few and far between are there instances where chasing it and it runs 500, 600, 8 points. It's very rare that it does that, but it's more likely that it does these little go up, break out, get people caught long, and if they didn't get enough on that pass, here they have it now. So we have 1, 2, 3. Now we have it with the candle there. So we have three drives pattern higher inside liquidity. All of this is made jagged now, and I want to see, can we get into this below it, treat it as inversion fair value gap. As long as it doesn't trade below these lows or into this gap here, I'd like to see it use that as a catalyst to bring us down into that. And then hypothetically, Caleb, what you would say is, I want to see if it does these very things. This would be a screenshot if it goes down there after keying off that, That's a screenshot for a short idea that you're not demoing it, you're not in any kind of actual trade, you're just watching it. And then you would say, okay, partial taken here, and then you would look to see if it wants to get down into this one. But you're taking one step at a time. You're not trying to go in here and pick the top. You're not trying to call the top. You're looking for signatures to support an idea that you're hunting, that will be part of your repertoire and your model. You're not forcing your idea. You're not arm wrestling. You're not trying to impose your will. You're not saying it has to happen. You're watching to see if these things do in fact form in price action. You gotta be really, really relaxed. Try not to expect everything to pan out to your wishes every day, because it's not going to be like that always. Okay, small little gap right here. Right there, between that candle and this candle's high. I keep telling myself, pour my water into a cup so it's not always making that noise. But just think of it as ICT ASMR. I got people that leave comments and say, I like when you whisper. I wish you would talk your commentary in whispers. And then I have other people saying, dude, why are you whispering? I'm creeped out. And you think I'm bipolar. my audience is bipolar. They're never, they're never satisfied. Okay, one more pass into the original buy side right here. If you look back at what we've been doing since Tuesday, as I mentioned on that day, I said, even if it wants to keep going higher, it's okay. We're not trying to pick a top, we're not trying to pick a bottom, but we're looking for logic to frame a form of study that will hopefully help formulate a routine that we go into price and we look for these types of things to occur. And if they are not in the chart, you're sitting still. It doesn't mean you're subpar, substandard, not able to trade because you're not looking at every one of these fluctuations and knowing it's going to do it. That's irrelevant right now. The information is too premature and we're waiting. So I'm framing it on, I want to see it get below here. If it keeps going higher, that's okay. I'll wait for more information because 10 o'clock, silver bullet, that's our main focus for the day. But we're watching and observing the opening range, how we're behaving initially with the liquidity. Sell side, which I should have this annotated, I apologize. Now, when we were looking at this gap here, as I was mentioning it, I would have preferred to see this go and not come back down to that again. The fact that it came down like that, to me, is problematic. I don't want to see a run do that. And it just feels like they keep sending it higher. And all of this is work to get people in going long or stopping out anyone that's already short. So these types of days or these types of conditions in the early part of the session, you see people complain, oh, they're chopping me up. I keep getting stopped out. I don't know. It's just, the chop is, really messing me up. You have to learn to wait. It's nothing going on. Just because we annotate the gaps and the runs where it could reach to, that's not your trade setup. That's not Caleb's setup. It's just we're studying delivery, how it behaves. Is it able to hold on to these levels once they're being booked? I'm studying this. This is where my eye is. I'm looking at how price is held above here. All of this, I'm viewing that as potentially just a trap. Keeping the market there, holding it there, and then because it won't rally, or if it doesn't rally, let's say it that way, if it doesn't go higher and parabolically start running away higher, it's more likely that this is just being kind of like a snare, holding traders in the hope that it's going to keep going higher, because we had this big run at 8:30. They feel like they missed the move. We opened at 9:30, small little decline into a fair value gap, and then back up into the buy side. So we're working this area above this high, but are we seeing any immediate runs higher since then? Not yet. It can, but I don't want to trade this early, because these are generally times where you can get caught off guard or offside. That means you're on the wrong side of the marketplace. So I would rather err on the side of caution and wait for the information I've already given you. I want to see this gap, trade down through it, treat it as an inversion fair value gap, and reach for this liquidity, and maybe get as far as down here. And it can still go higher. Just look at how it traded yesterday. Okay, so we made another higher high. So same thing here. I'm still viewing this as all of this could potentially just be holding traders in, trapping them at a higher price, and then rake them lower. Because they could do two things by doing that. Number one, it's going to cause pain for anyone that bought a breakout. I'm not interested in buying a breakout. If it rallies and keeps going higher, it's okay. It's a move that I'm not a part of. Go back to the lecture I gave on Tuesday's live stream. I guess that would be what? The 7th? Just look at whatever Tuesday's date is. And that lecture talks about what I'm willing to endure, what I'm looking for, what I will not be interested in trading on, and when I let price go without me. So because we've had this big run up since 8:30, let's put some of that back in the chart again. This is all euphoria. And then we had a high, we opened, traded above it, traded above it, traded above it, traded. Now we're here. I'm not interested in taking that long. I don't want to buy this. I wouldn't take a fair value gap in here to go down into the trade higher, because it's too long in the tooth. That means it's too far stretched out, and it's more likely to try to revert back to a fair value. What is that? Where liquidity is, below lows, gaps, relative equal lows, this gap here, this consolidation. There's a lot of liquidity and interest to protect a long position right below here, because it's moved up a lot real quick. So traders are going to want to be placing their stop loss just below that to protect and preserve the majority of all this move if they were happy or lucky enough to be part of it. Okay, 950. Just about 9 minutes before silver bullet 10 o'clock hour begins. "52-year-old bones cracking." Just want to take a peek at ES. So ES is lagging a little bit. So that means it's probably going to either see NQ stay at its highs and allow ES to catch up, meaning that ES, it should be going above this high. But if we start to see NASDAQ break down and ES fails to go to this high or higher, we have my eyes going here. So if it's going near, I like that gap for ES. So for those that are watching ES, just look at it like this. It's easier for me to draw that level there, but it still might first initially take out that high because we have NASDAQ flexing today, strutting her shit. Remember, we're not trying to pick the end of the up move because it's an election year. I told you many times, even in Twitter Spaces last year and the year before, election years, they tried to pump up the stock market because they like to make the incumbent president look like they've done well for the economy. But the stock market is not indicative of a measurement of the economy. It's just a speculative casino. So it's kind of like a built-in self-fulfilling prophecy. Election years tend to have a built-in buy model. It just keeps going higher, pressing higher. It's easier for the market to go higher on election years than it is to drop. And you add that to the built-in premise that stocks are meant to go up, the market's meant to go up. You're fighting a losing battle if you're trying to short every instance that the market gives you some kind of a broken wing tactic, like, oh look, I'm about to go down, and you go in and you try to short it, you get chopped up like this, which is why I have adopted models where I have to see certain things traded to. And then you got folks that may listen to this or watch it and they'll say, this guy doesn't know where the market's going. I know where it's going. It's going to keep pushing and squeezing against people that want to go short, because everything tells me it's wanting to go down here, but I have to wait for it to stop doing this part of it. And my rules say it's got to give me this first. Well, you're missing out on all this. Are you in it? Did you go long? I'm not taking anything unless it makes sense, because I don't want to take a trade. I don't want to go into a trade. I don't want to have an emotional tie or concern about the outcome of price fluctuation unless it fits the criteria that I anticipate seeing. And if it doesn't have those hallmarks, those indications, what am I doing? I'm gambling then. If that's what I'm not following a rule, if I'm not following a model, then I'm just chasing price, and that's stupidity. We already know that there's a likelihood for it to keep going higher. But even if it does go higher, it has to drop and have some kind of a retracement, some price swing that upsets liquidity on the downside, sell side. Sell side has to be engaged, because my mentality is, I know that entities with larger pools of income and equity and money to put on a trade, better and greater than I do, they're not willing to take any interest in the market when it's rallying initially right off the opening like this. It would rather be more likely that they'll wait for the market to come back and go into a pool of liquidity where there's deeper discounted prices, and that's always going to be below old lows, singular or relatively equal lows. And waiting for those instances is far better than just simply saying, it keeps going up, just keeps going up. Let me just get in there because it might just keep going. It could just keep right on going up today. And just like on Tuesday, I don't care. I don't care about that, because I'm not trying to be just a part of the move. I want to be in a setup that I have framed with logic, that I've recognized, I've seen before. And I'm not just going in there for the sake of, I want to put another coin in the slot machine to see if I can get a jackpot today. That's gambling. So in other words, it has to make sense or I'm not doing it. I'll let other people out there demo and do the trades and try to fade me and say, I did this. but you won't have any logic behind it. It'll just because you wanted to say you did something different. I was reading Tanja's chat yesterday while I was going back over the people I like looking at. And I'm reading the comments. They're saying ICT doesn't know where the market's going to go. Even ICT doesn't even know where the market's going. I was outlining it yesterday. These people are really funny. Let's take a peek at the let's look at the weekly chart. Right here. So 444.5, is that what that is? It looks like it. All right, and now we can go. So we're trading in the middle or consequent correction of that weekly gap or weekly wick, which we treat as a gap. So I want to see, does it start to peter out and run out of steam here? If it powers through and goes higher, that same level, 444.50 or so, could act as an inversion level. But I'm not trying to do anything with it unless it goes back down through it, comes back up, and then treats it as a means of support. Yeah, it's beautiful, isn't it? The other reason why I'd like to see it trade lower before I would ever want to go long is if you look at the opening range, it's annotated with the high of it here, which is the opening price at 930. Many times, many times, even when you have runs that just start running like this, they'll want to come back down, in this case, to come down and touch the opening range high, which is simply the opening price. And then if it wants to keep going higher, then it can start to go higher and press through that going into the close of the week. Either way, this is still nothing I would chase. I would not want to be a part of that. And I can understand if you're new or if you're rather a novice, you've been trading for a little while, you may be demo trading, maybe you passed a funded account but never got a payout, and you're just always constantly looking to validate yourself by having criticism directed towards somebody else. And if I'm sitting out here and everybody knows I'm a little bit of a loudmouth, and you see runs like this and you're saying, well, he should be part of that. Well, I'm not interested personally in trying to chase after that, and that's been my roles ever since I stepped out as a trader, educator type guru, if you want to call it that. You'll see more instances of trying to chase it and then failing than it just keeps going higher and higher and higher and never turns around. Like, these are unsustainable price runs. There has to be some kind of a retracement. And if you don't believe me, go in with your account and trade it and see how hard it is to hold it, number one. Every little fluctuation or candlestick that stays small and doesn't really rally, you're going to start feeling all of this anxiety because you're like, oh man, because it's too perfectly one-sided. And to me, that's just too enticing for someone to get raked across the coals. And I'm not willing to be the person to do that. So I will give up price runs like that, just like on Tuesday. It's not important to me. It has to make sense. So we're in 10 o'clock now. Look at the Dow. It's another reason why I'm not a fan of going in it, because NASDAQ is the only one. Only one. Isn't it interesting that I'm live streaming and I'm not looking for it to go higher. I'm looking for it to go lower and to keep driving it higher. Because some of you are probably trying to predict and trying to capture the high and trying to go short. And if anyone's doing that, you're providing liquidity for that market to keep rebooking higher, because they know they can use your trade to book that higher price that they keep pumping out into the marketplace. They keep offering higher prices, and you go into the market order, you go in with the limit order that meets that criteria, they keep pushing price. The whole time, Dow, and I don't make the case for SMT just on the basis of Dow, but look at Dow compared to ES. This is SMT. Look at the ES. Whoops, that's the wrong one. I was gonna say, wow, we got a we got a real mixed market now. So we have the higher high there, but we don't have it with the Dow. And go back into NQ. There we go. So we could be forming an intermediate-term high here for NASDAQ. And I'm interested in, let me leave that there for now. I'm interested in this gap right here. Right there. So now, because we've had this elongated run in market protraction higher, digging in, taking anybody that wants to be short out, building in people net long. So now they have counterparties that they've sold to. Initial fair value is this, not fair value gap. Fair value, for the sake of fair value, is the opening range high, which is the 930 opening price. So it's in my interest to see drawing back down into that and touching that again. Even if it wants to go higher, that's fine. Stupid thing, I hate that thing pops up. All right. So now, if say you're long and you were chasing it here because you wanted to fade ICT because ICT said, I wouldn't buy this. Oh, I'm going to go long and I'm going to be able to show social media that I went long. Well, you're shitting yourself now. I want a little bit more than that. Just opening and touching that, that's not enough. Malo. Don't ask me why that's in my head, but I woke up singing that this morning. So I have a Samsung Galaxy Note 20, I think is what it is. I forgot what it is. I've had it for like 2 years, and I did the update on it. There's our inversion there. There you got the and now the top of my screen, on the top edge of it, it flickers and it doesn't show the full, like on YouTube, everything's truncated. It doesn't show everything. And my emails don't show, and my charts don't show. So it's something at the top of the screen. So I guess that's that planned obsolete stuff they do. Well, I guess you got to get a new phone, don't you, ICT? Nope. This is my last cell phone. I'm not buying another one that can suck my ass. We want to see it, if it wants to trade back to here, we want to see it get below the consequent encroachment of that wick. Right now, it's potentially using it as support to go back up into this inefficiency once more. So in other words, we can see a spike or a wick above the inversion fair value gap. Can spike up into that, but the bodies stay inside of it. That's okay. In my mind, it's permissible. I don't want to see it go back up to here because that would mean that this is an exhaustion gap and it's moved away aggressively. This one here, it can be traded up into, but I'd like to see the upper portion of it stay open. So let me zoom in so that we can see it. Let me make it maximized first. Think of it like this. High. There's half. So I would like to see this portion up here stay open. So like this. Here. So that. Okay. So any little spiking up with a wick, but the body staying inside of that shaded area here, validates this as an inversion fair value gap. So now, say on a day like this, where you keep seeing, just keep driving higher, 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 and it's, I guess, I don't want to use the words, I won't use the words. It's more difficult for you to get a read on it. You don't want to trust buying it because it's going higher and it's been going straight up from the open, but it's also had a big run at 830. So every Tom, Dick, and Harry street money is trying to buy this today, right off the open, and they've rewarded them with a sugar rush. But you see the things I'm showing here, this gap, we want to see a trade there. There's an inefficiency here. This one, we want to see that treated as an exhaustion gap. This one, we want to see it stay open in the upper half of it. Because if it can't trade up into this portion of it, that means it's really heavy. And we can have a strong conviction, I would have a strong conviction about it potentially returning back to the 930 opening price and leaving that pink area up here unfilled. Okay, in other words, don't completely close it in. Can it go up there and close that in and still go lower? Yes. It's just a matter of I prefer it not to do that. We've had 1, 2 little wicks above outside of this, but where the bodies are inside of it, inside of that gap right there. We found our way through the midpoint of this gap, which is the discount wick. So halfway, let me get all these other extra lines off. I'm sorry. I was running standard deviations on S&P last night, and I left them on. I apologize. So here's the consequent encroachment of that. I don't like the fact that we're bumping up again in here after making lower attempts to go lower. So now go back into thinking that it could very well go in here once more, maybe touch the low, which is consequent encroachment of this low, that candle's high. But this portion, I want to see that stay open. If it completely rolls over top of that pink area and trades higher, I'm standing still and I'm going to have no bias, and it would be a no touch, no trade, not doing anything. And I would then wait until 11 o'clock, 11:30 to try to trade against whatever's been in the marketplace up until that point. And I would use that as a lunch macro, and I would fade the run at that time, and I would look for similar situations. So here we are. We spiked up into that portion here, which is permissible. If we can get a close below this point here, that would indicate that it's most likely going to roll over and then return back into the opening range. Having done this as long as I have, I'm very, very appreciative of having the patience that as a younger man I would not have had. I would have been chomping at the bit every time it rallied up. I'd been like, oh man, I wish I would have bought that. I wish I would have bought that. And seeing how it's trading now, I'm thankful that I have endured the painful lessons that I had to endure, because if I didn't, I would have never learned any other way, because I had initial luck, and that's always a bad thing. If it ain't made on skill and real ability, and it's just luck, you can't hang your hat on that and feel good about it. And it certainly doesn't bolster confidence. And we got to touch the consequent encroachment. And again, I want to see this portion stay open. And if it trades through it and above it, my interest is over. I'm not doing anything with it. And if I have time, I may stream the afternoon in that event. No promises, but that would be something I might want to do. Quick peek at ES. I'm looking at everything just like you would if you don't have all the real estate I have in hardware and charts and stuff. I have my single laptop. I'm in my basement laying on my wife's love sack here, using the footstool as my pedestal for my laptop, which is probably not a good idea. That's why it's so hot. It's not even able to vent. Raise this thing up. And then let's take a quick look at the Dow. No participation. So we have a mixed condition where we don't have all three averages agreeing. That's also something that if this would have been like the S&P, then it really would have been problematic to be a buyer for me. But I don't need all that. It feels like they're going to wipe that high one more time just because I'm outlining it for a retracement. And if I was making the market and ICT was live streaming, I would do that too. And then I'd sink it after that. See that timing? You think I don't know what you're doing, Phil? So far, we've had this entire gap close in. Here, the bodies are stopping. We had one little mohawk outside of that range. This portion, again, I'm viewing that as a exhaustion. We press higher. Trade below the gap I have interest in. This feels like they want to pump it one more time. I swear that why anybody likes to trade the Dow is beyond me. It is so ugly. It's only 30 stocks. So sloppy. So now here's what we have. You have the market has dropped. Shorts have their stop loss here. Not this one. This one. If we get a higher high, because I have to make my escape here. My appointment's coming up. I'm going to make sure I get off here and be ready for it, because it's a phone conversation I have to have. So, okay, we're in this area here. So that means it's probably going to run this high. If it runs the high, then I would look for it to break down. If we can get back below this gap, this I would like to see that act as an inversion fair value gap. No trades have been taken. No face needs to be saved. No pain, no embarrassment, no nothing. It has to provide me the information, or there's nothing to do. And I'm not going to co-sign on market action that I'm not comfortable with. And that's the whole point of teaching my son this way, because it's not about getting in a trade just because you have a trade. So I'd like to see it bump to high one more time. That would give the street money comfort that they're probably right, and then they would raise their stop loss below here. So this is where a second pool of liquidity is. Relative equal lows. If it's going to go up there, it should do it now, because you had a gap, it overshot, it went into that gap here, so it should spring up there and clear that high. This yeah, I might live stream this afternoon rather. If I do, you'll see a post on my community tab on the YouTube channel. It wouldn't be before it would probably be 1:45 if I do it at all. But this, for Caleb's learning, he would be doing nothing. He wouldn't do anything today, because the time constraints have already expired for him. It wouldn't be something that he would be pushing and doing anything, so he would turn his charts off and just go do whatever he's going to do, and then come back in the evening and do his logging and backtest to study to see what was available in price action. I'll stay with you for another 3 minutes, and then I'll close this one. When we get through August, this is pretty much what the timelines are going to be, like starting when the stream, hopefully at 9:15, but 9:15, and then closing them by 11 a.m. So they'll be a little bit smaller in duration and a whole lot less talking, because I want to be observing and watching price and only speaking when there's something that's pertinent. So I'd like to see, as like a trap or one more gun on it to set up a retracement into the opening range gap high, is not just go above this high by like a tick or two. I want to see them throw it above there pretty good, like 10, 15 handles, maybe 20 handles above it, and then peter out. And especially if they do that with the S&P not doing so hot, in comparison, it should take that high out. So you're understanding. I believe that high could be taken out. But this afternoon, going into lunch or post-lunch, this gap and this level right there, I believe we're going to see that again today. That's what I would go into the afternoon, without me knowing anything more than I have in the chart right now. I would look for those levels to be traded to. And if it doesn't do it prior to 1 o'clock, then I would expect that to be what we would see in the afternoon. And if I can find the time and the opportunity to live stream it, and it hasn't done those things, I'll come out and I'll try to walk you through it as well. But the YM, this is a sick puppy. Like, I would not be interested in that at all. Now, one of the things that Dow tends to do is it'll do all this lethargic, I'm not following along, and pout. And then all of a sudden it comes to life and real suddenly runs and gets to these levels. So then that way you have any cancellation of an SMT divergence where one indice makes a higher high, or two indices make a higher high and one doesn't. Generally, it's usually going to be the Dow that doesn't want to listen. It's a brat. It just does not want to listen. And that's the reason why I don't trade it, because it's usually the first indication of things starting to crack. Things are not they're not as strong or as weak as they may seem. And I prefer to see a SMT divergence on either the ES or the NASDAQ comparatively. So in other words, if a higher high seen in ES, if the market breadth and strength is there, then the NASDAQ should do it too. And if it's not seen, then I'm not really willing to chase or look for continuation or look for a follow through for the session or for the day. All right, this should pop up there next candle. There it is. So anyone that's short here, they've been canceled out. So then now I can't stay with you because I got to escape now. But I would look for a reason for it to roll over and then it start to accelerate. And I would treat this gap as an inversion pair value gap. And because of the range and the size of it, run the quadrants on it. So put your fib on that candle's low, that candle's high, and have all those levels in here. And we would start to see, once it gets down below it, we want to see the upper half of it left pretty much open, not try to trade to it too much. And all the work be done at the lower half or underneath it, and then send us below the consequent correction of that wicks midpoint, and then accelerate with large candles below here, trading back down into opening range gap high. And if it wants to accelerate through that into the afternoon here, and then liquidity there. And it can still go higher after that. Just know that that's what I would expect. And I think that's going to be it. Not all that terribly sexy today, but that's how it's going to be sometimes when you're trading your own money. You're just going to have to wait and don't force it. That's going to be it for this one. I will touch base with you this afternoon if it's possible. If I can work it out with my wife and she's okay with it. And if not, I will see you tomorrow before 9:30 opening bell. Let's say it that way. I'm going to aim for 9:15, but before the opening bell at 9:30 New York Eastern Time. So I'll talk to you then. Be safe.